So the fundamental difference between Indian economy and Chinese economy was that of a demand-driven economy of India and export-led economy of China. So India used to have current account deficit, still we have, and China used to have current account surplus. So we were always more worried about widening current account deficit, and they were more worried about shrinking current account surplus. 2008 there was subprime crisis followed by the Eurozone crisis of 2012, and this led to a decline in the global demand. And this impacted the Chinese economy significantly. So what China did was, in the decade of 2020s, China, it shifted its focus from production to capital market, to capital bases. So we saw Asian Investment Infrastructure Bank and other forms of initiatives taken by the Chinese economy. Now this had a significant impact in the current account surplus of China, and it started shrinking. And in fact, 2023 witnessed an all-time low of current account surplus of China. And therefore, this year, the Chinese Prime Minister Li Qiang, he gave a new term. He talked about the new productive forces. He pegged the target of China to 5%. So you must remember, India is pegging a target of 7.5% in the next quarter to come. That was what being stated in the present budget speech. So China is pegging the target to 5%. It talks about new productive forces, and the significance is that the Prime Minister marked a shift from bloated property sector to new productive industries. That means China henceforth would be directing its economy from capital towards production via use of new technology, that is AI, robotics, machine learning in all forms, which are going to impact production significantly. And thereby China is hoping that it shall increase or it shall widen its current account surplus. Now it will be interesting if China's attempts at increasing current account surplus, reviving economic growth, will be at the cost of other countries, or whether it will have an impact on India's current account deficit or not. That's generally the manner in which we tend to understand how the global economy functions.